Hi, thanks for having me.
Thank you so much for being here. Mance Harmon, CEO, Hedera Hashgraph. Hi, Mance. Thanks so much for joining us. Bill Barhydt, CEO of Abra. Hi, Bill.
Hey, everyone. Great to be here.
And last but not least, Alex Mashinsky, CEO of Celsius Network. Hi, Alex. How are you?
Great. Hi, everybody.
Thank you so much, everyone, for joining us today for Gulf Blockchain Week for this amazing Dubai event. Well, with an all-star lineup, I would really like to touch a lot of topics, and I would like to address some specific questions to everyone. So let's start with Alex. So Alex, CeFi and DeFi, what do you think drives users for digital asset platforms, and vice versa? What type of users do you think drive the market?
Sure. So, we live in a world where central banks have squeezed rates down to zero, right? Commercial banks are also not paying you anything these days. And if you can create yield or generate yield in other means, that's just going to drive capital away from traditional banking and into platforms like CeFi and DeFi, right? So today, it's only the brave at heart that are migrating, right? People that are kind of comfortable with the blockchain, comfortable with digital assets. But I think it's going to become more and more prevalent where more and more people are going to look at it as similar to what money market funds are or traditional banking, where you used to be able to earn high single-digit, maybe even double-digit yields.
So will DeFi platforms that gained so much popularity over the last several years, and banks who are exploring digital assets too, will they eventually coexist, or is it still a battle?
It is war for all the money in the world, right? This is not a little skirmish, right? So today, you have to understand that banks earn a double-digit return on their capital. The reason we know that is because most banks are public companies, and you can just see them bragging to their shareholders of how much money they make on their capital, right? So the hard part for banks is not to earn that yield. The hard part for banks is to decide not to give it to their shareholders as dividends, and rather give it to their depositors or their customers as interest income. That is the piece that we've basically, no bank has been willing to do for the last 30 or 40 years.
Bill, here's to you and to Alex too. So, blockchain really, regulators are very much hard on blockchain and finance, right, these days, especially in some jurisdictions. And, DLTs and digital asset platforms are great, but they have flaws too. Well, how to ensure banks level security for users? This is for Bill and for Alex too.
I mean, let's break it down, right? So banks have horrible security. They get away with it because of the way the insurance works and the laws works and how they're forced to make consumers whole. Whereas when exchanges are hacked, which happens, not all the time, but it does happen, you read about it fairly regularly, the consumer almost always has no recourse. And especially if it's a 2FA hack, which is somebody effectively, people using SMS, which blows the mind that people are even able to do this anymore for security, is stop using SMS. But the regulators don't really focus on that aspect of the business, meaning information security, right? They put the onus on the companies to deal with that. What they tend to focus on at the federal level is retail investor protection, and that's a moving target, right? So I don't know, we're overseen in the US alone by about 65 regulators at last count. And so, this idea that we're in an unregulated business is simply silly, right? So we've partnered with multiple banks, with multiple custodians, lending licenses, licensed money transmitters. We operate as a registered MSB as well, and I know others here do the same. So, this whole idea that, we're waiting for regulatory clarity, for the most part is just not true, probably with the one exception of are certain digital asset securities. And other than that, we kind of proceed on the assumption that we decide based upon the facts and circumstances as we, the industry, see them, until a regulator who is empowered to do so tells us otherwise.
Alex, would you agree?
To add to that, yeah, so Hester Pierce was she's one of the commissioners of the SEC. I think she said it best. She said that it's not the job of the regulator to protect the incumbents, right? So I'm not sure everybody in the SEC agrees with her, but there are regulators, right? I'm sure that there are regulators who view this as an opportunity, and there are regulators who view this as a huge problem, right? I mean, the future is here, right? But we need to grab the future. We need to leave the past behind, and the banks definitely don't want us to let go of that branch of the tree and migrate billions of people into the digital future. So people are worried about, okay, well, how is it going to work? How is the protection going to be? How can we deal with the safety? What happens if somebody's money is stolen? We have answers to all these things in traditional finance. We don't have answers. There is no FDIC on the blockchain, right? So I think we need to, part of what the regulators are struggling with is not just who's a good actor, who's a bad actor. They're also struggling with, okay, what are those protections that we used to in traditional finance, the old tree, and what happens if we jump to this new tree, the future? How do we deal with all these things over there? Because it's not the same, it's never going to be the same.
Ironically, at Abra, we're onboarding high net worth customers pretty much exclusively now at an awesome rate. And consistent feedback, and I'm sure Alex, you hear this as well, is they look at our lending practices, safety and soundness practices, risk management, and people in the know, their feedback is usually, you guys, it feels safer than a bank to me, right? We know how you're lending. We have no idea what a bank is doing. I'm getting most of the interest. I have real-time access to my funds when I need them, and if I'm using a stable coin, most stable coins in the U.S., well, all of them in the U.S. have 100% reserve requirements, which a bank doesn't do, right? Banks are allowed to basically lend money that they don't have. It's called fractional reserve banking, and still claim that they're maintaining your deposits, which they're not. But if you're issuing a stable coin, right, which is just another form of digital asset, it's backed in the U.S. by 100% reserves, which sounds a lot safer to me than fractional reserve banking. And so our smart customers, they get this, and they see where this is headed. And they're not early adopters anymore, because this is the fastest growing rate of adoption of any technology in human history, right? That's what's happening in the digital asset space right now.
I love that you mentioned stablecoins, and the next question about stablecoins and CBDCs I would like to address with Mance, of course. But before that, Mance, we've seen so many exciting news from Hedera in the headlines lately. How the ecosystem is expanding. Can you give us a little bit of insight?
Yeah, well, thank you. So for those that don't know Hedera, what we have is a governing council, currently 24 council members, I believe, maybe it's 23, of some of the largest companies in the world, specifically chosen to be council members to have good decentralization across use cases, across industries, and geographically to represent the full universe of use cases in the DLT space, public DLT space. We have been growing. We have a lot of customers now that are using the platform for its intended purpose. We have been focused on enterprise use cases, although most of the transactions that are happening today are not from enterprises. They're from smaller companies, but they're not what you would normally see in what is a lot of the focus of the industry today. These are use cases that range from tracking COVID vaccine to markets for trading energy credits, to capturing information associated with war-torn areas in third world countries. It's just a very broad range. Of course, it does include some of the DeFi applications. Standard Bank, for example, as a council member out of South Africa, they are working on a solution where they will tokenize bond issuances. So we have a broad range of use cases, and the ecosystem is growing. We just announced a foundation. We launched a foundation a couple weeks ago and funded it with, depending on what the token price is on any given day, between $4.5 billion and $5 billion of tokens. And so a lot is going on in the world of Hedera Hashgraph.
Well, congrats! This is exciting news. So what about stablecoins and CBDCs? Where do you see these types of assets and banks exploring or maybe applying and implementing them in the next, let's say, decade?
Yeah, if you look at one of the earliest enterprise use cases, going back 7-8 years now in the DLT space, it was supply chain, right? Everyone understood that the distributed ledger technology had a lot of value for supply chain applications and use cases. What's changing is that instead of there being a ledger that is used to record the items that are flowing through the supply chain, those individual items are now becoming tokenized. If you think about widgets in the generic, you think about widgets flowing through a supply chain, they each individually now end up getting their own token. And the importance of that is when you combine that with whether it's stable coins or CBDCs and CeFi or DeFi, the new tech stack for finance, then what you end up with is a digital workflow where the widgets themselves that are flowing through the supply chain, their digital counterparts, their digital assets that represent them, automatically in this workflow interface with these new finance functions. So you can have tokens that are associated with widgets that get used with DeFi or CeFi to get a capital loan, or used further down the supply chain for the purchase of shipping insurance or product insurance. And then later you transfer the ownership of those widgets, their tokens, to somebody on the receiving end downstream in the distribution channel, and you get tokens back that now represent accounts receivable. And those tokens, tokenized ARs, can be used in a DeFi or CeFi context to be factored. So I think that while the industry has been focused on borrowing and lending instead of the generic, when it all grows up, the face of finance and manufacturing and enterprise in general is going to look very different. And that's what's exciting to me. I think that the banks, all of finance is going to have to change. The value associated with this kind of integrated finance function into supply chains generally just is enormous. And what it will result in is that everything you see and touch, all products and services, are going to end up having a token counterpart. We are going to live in a tokenized world, guaranteed. And that's coming. And you take all these pieces of infrastructure, like the stable coins and eventual CBDCs, with the new finance tech stack and CeFi and DeFi, and the later ones like Hedera that enable tokenization, generally speaking. You put it all together, and it paints a really beautiful picture of the future of industry and finance in general.
Wow. Brian, I saw you nodding while Mance's speech. What's your take on the overall tokenization?
Oh, well, certainly the word token has gone into a lot of different directions, means a lot of different things to different people these days. Certainly representing digital twins or an entirely virtual object that correlates to a physical object that's being traded hands, and where you have prevention of double spend, that sort of thing. That's certainly big, and it has been big in the enterprise blockchain space long before the term NFT was coined. We've been doing trade finance, supply chain traceability projects for a long time. In fact, just two to mention that cover 80% of the containerized shipping these days are the trade lens and GSBN, Global Shipping Blockchain Network, that between them, the partners involved in those, the shipping giants, cover 80% of the containerized shipping world. We can't do anything about the lack of lorry drivers in the UK or others that have started to gum up the other factors that have started to gum up the global supply chain systems of the world. But at least when it comes to tracking and knowing where these products are, these are systems that are now mature and seeing wider spread adoption. And I said trade finance there briefly. The idea of combining, the proof of where an object is in that chain, and when it's being held by customs, for example, and being handed off into a country, for example, tying that to a financial payment. That's core to trade finance networks that are now out there and operating across many different countries, particularly in Asia, where the Monetary Authority of Singapore and the Hong Kong Monetary Authority have played a really key role in building trade finance networks in that region. They also, along with the BIS, have played a pioneering role in the central bank digital currency space. They're currently running a challenge, a CBDC challenge that we're participating in, but they've been doing projects with all sorts of banks, the Bank of Thailand, many others around using Hyperledger Fabric, Hyperledger Bezu, and many of the other enterprise blockchain platforms out there to not just speed payments between central banks and leading banking players, but tie that to the supply chains of the world. I should actually mention as well something called Project Abra, which is a collaboration between the Central Bank of UAE and the Saudi Arabian Bank to explore the use of these technologies, and that was based on Hyperledger Fabric. In fact, according to the CBDC trackers that we see out there, the majority of CBDC projects, either in pilot or production these days, are built predominantly on Fabric, but there are quite a few starting to use Hyperledger Bezu as well, which is our Ethereum technology stack. So it's a really exciting time in the CeFi space, perhaps to put that. They certainly aren't resting on their laurels, and companies like JP Morgan and Visa and many others have engineering staffs that dwarf many of the engineering staffs at most software companies. It's pretty amazing. The final thing I'll say is, volumetrically, this space is expanding, beyond obviously finance into healthcare, digital identity, into all sorts of. It turns out every industry has a supply chain of one sort or another, even if it's entirely digital. You might have seen some recent NFT announcements from a company called Palm, which recently, like last week, announced a tie-up with Marvel Comics, for example. They've announced tie-ups with several other rather noteworthy NFT issuances, and those, even if they're anchored in some of the public ledgers out there, the core trading platforms for those are permissioned blockchain networks, in Palm's case, running on top of Hyperledger Bezu. In fact, to get a highest level picture of where and how this is being used, the two data sources I would cite are, there's a publication that Forbes puts out once a year. Michael Del Castillo there does a survey of the top 50 companies in the blockchain space, and 60% of those are using Hyperledger Fabric for some really prosaic use cases. Everybody from Cargill to Honeywell to BHP. I mean, all these blue chip companies now using this technology. The other is a company called Block Data, which just released a report of the top 100 companies in the world by market cap, and found 81 of them had an enterprise blockchain project, either in production or in pilot. So this is becoming core enterprise infrastructure now. It's no longer something we have to sell. Certainly the more that we can talk about it, aside from the kind of speculative financial instrument side of that, which was the underlying basis initially for a lot of the public ledger stuff, the more we can talk about this is distributed ledger technology. These are multi-party systems. This is a way to solve the counterparty risk problem and the difficulty in auditing, especially cross-border types of traditional applications. And there's so much of the existing world that can be taken and digitalized through this technology that even, you talk about sometimes regulators being skeptical of blockchain, and many of the regulators I meet are very enthusiastic about it because it gives them a way to manage and have a viewport into markets that they didn't have before. So sorry, I went in a very wide-ranging direction, but that's really what's so exciting still about the big picture of where enterprise blockchain is heading.
Brian, thank you so much. Getting back to your amazing coverage of enterprise applications. Thank you for covering these. And which ones do you think are very much needed right now in the post-COVID world, but are still in the making?
The post-COVID world is certainly going to be different than what came before in some ways. We certainly, I hope at least, will be caring a lot more about things like proof of vaccination status, to be able to, especially when we get back to international travel, as some of us have, being able to show, here's the vaccines I got that should help me not only get into a new country, but also get into a restaurant if they have proof of vaccination status at the restaurant level. There's a consortium of organizations that work together under the rubric of something called the Good Health Pass Collaborative that have created an interoperability blueprint that has started to be implemented now. And these are companies like Accenture and Microsoft and a whole long tail of startups working to build the governance framework for being able to say, here's portably what those proofs are, and here's how that can evolve over time, right? And in fact, at the Linux Foundation Public Health Initiative, we already have an implementation of many of those standards in a project called Cardea that uses many of the Hyperledger distributed and self-sovereign identity technologies at their heart. But it could also be anchored in everything from the Bitcoin blockchain, which Microsoft has put some effort towards other public ledgers as kind of the anchors for these proofs. But at its core, it's not a blockchain tool. It's a digital identity tool. It's a portable and privacy-preserving proof of vaccination status kind of tool. So that's interesting. But as we get to the post-COVID world, I'm hoping that COVID kind of as our primary concern of the world goes back and we get back to what actually is the more existentialist kind of threat up there, which is the climate challenge. In 30 years, our offspring are going to look much more harshly at us for the actions we didn't take in this generation around climate than they will around what we did or didn't do around COVID. And that's where getting back to, like Mance mentioned, some of the carbon tracking and carbon emissions credits kinds of projects, energy efficiency credits, those kinds of things. I think a lot of this does boil back to supply chain. How do we get supply chains to report on emissions of carbon everywhere in the chain of, getting a sneaker or a shirt, that kind of thing, and in a provable, high confidence kind of way, allow us to make purchase decisions that favor those that used low carbon technologies, those sorts of things. So quite a few initiatives out there on that front now. One of those around reusing of industrial materials comes from a company called Circular that's based in the United States, but has been doing a project in Africa around the supply chain around rare earth minerals from batteries and then reclaimed from old batteries and that kind of thing as well. So, and they have a partnership with Volvo. They're trying to do the whole closed loop around rare earth minerals. Type of thing, which is just a small part of this bigger picture about how do we reduce our impact on the globe. But those are the kinds of use cases that really drive me to get up in the morning and work on what I do, not making financial markets 0.1% more efficient.
Thank you. Mance, would you like to follow up on this? What's the next black for blockchain?
No, I think Brian is exactly right. And we, not surprisingly, have a big concern about carbon credits and the trading. One of our council members is EDF, which I believe is one of the largest utilities in the world. It's the state utility for France. And we've been working with them and a whole ecosystem of organizations to explore the creation of these decentralized marketplaces for the trading of carbon RECs and offsets, right? That's a very fragmented market today, and it's very inefficient in terms of being able to match supply with demand. There's very little supply out there. There are a lot of technical problems in being able to tokenize and understand create trust in the creation of tokens that represent carbon credits, for example. And so there are a whole host of problems that are being directly addressed. And I expect that will mature in the coming years, and it's going to be a huge market for the universe, for the Earth, and we're going to be right in the middle of it in the work that we're doing.
Thank you. Bill, Alex, what's your take on future decentralized economy?
Well, look, I think that this is probably one of the most special times we've ever seen in technology, right? I mean, we now have a technology, as I said earlier, in digital assets that's the fastest growing technology in terms of adoption in human history. And I think what you're seeing is a mass movement towards decentralization that really probably reached a zenith in terms of centralization Alex, I think, was referring to coming off the gold standard in 71, but just before that with the moon landing, right? The moon landing was the pinnacle of centralization. You had an entire society basically rally everyone you could for what was the most complex undertaking ever done by man at the time. And we've had a very difficult time getting it done again in the last few years. We're going to get it done again, but in a different approach, because we don't have the ability to execute on centralized systems like we do before. We've got to outsource things now. And so since then, right, beginning with the computer, then moving to the PC, then with the internet, then with the smartphone, and now with digital assets, there's been a very rapid movement over those 50 years towards decentralized systems from centralized systems. And now it's unstoppable. And this is part of the tension that we have between centralized regulation, decentralized system, large centralized monolithic entities like banks and other energy companies and other institutions that have, more or less government-anointed, monopolies. And they're going to fail. It's the last bastion of civilization that hasn't yet been disrupted by the internet, is these large centralized financial monoliths that get these kind of blessings from the government. And this movement is going to continue to accelerate and go even faster in the coming couple of decades.
Yeah, so to add to what Bill was saying, the 30 New Jersey and about 20 miles or 30 miles from where I was, Scott Stornetta and Hubble were working on the Merkle tree, which was the foundation of the blockchain we use today. And really, what happened in those 30 years? I mean, obviously, voice over IP, 5 billion people use it. We use it right now. Mass adoption, everybody's on it. What happened to the blockchain? We haven't seen much, right? The first time we've seen any kind of adoption was, again, with cryptocurrencies, and then second wave was with yield, right, with DeFi and so on. So I think the banks have done a phenomenal job. If you look at the internet as a revolution, it has basically did not put a scratch on any of the banks, right? Show me a bank that got disintermediated by any internet company, right? PayPal, Revolut, all these companies still run on the same rails created by the banking system. So here we have a revolution. It's not an evolution, it's a revolution. It's a new set of rails that allows for that decentralization of money, decentralization of currencies. And what you're seeing is complete reinvention. You're seeing a Cambrian explosion of financial innovation. And a lot of it is happening because it was stifled for the last several hundred years. I mean, back if you look at what the Medicis did 700 years ago in Italy, and we look at what banks did today with double entry accounting system, pretty much the same thing. Just they use fancy computers, but they do exactly the same type of lending. So I think the opportunity here is to really reinvent finance, which will unleash economic activity. That is what's going to unleash GDP. And the fact that we have this stagnant GDP over the last 30 years partially has to do with the fact that our financial systems, who basically operate as toll collectors of these semi-monopolies, have been stifling competition, stifling innovation, and all of that, you cannot put the genie back in the bottle. It's too late for that. So decentralization.
The Medici system was better. It was based on sound money as opposed to dead trees. So
in the beginning,
so they actually
in the beginning, they had all the coins, but then the notes they had were fake. So they went through the same process we went today.
They did.
Printing fake notes. They don't have anything behind them. So I think, look, if you look at the history of money, there were 750 fiat currencies in the history of humanity, and only I think 10 or 12 of them are still in existence, and the ones that are in existence, all of them lost over 90% of their value. So we keep doing the same experiment, getting horrible results, right? And then we keep doing it again and again, expecting different results. So it's time to replace our currency with sound money something that has limited supply, something that acts in our best interest. And the only way to deliver that is through a decentralized open ledger architecture.
Yay. Okay. My last question, I would like to put a spotlight on the place where the conference now takes place, Dubai, United Arab Emirates, and the whole Gulf region. So where do you think blockchain movement is headed towards in the region, and what's your take on blockchain opportunities for people who live and operate here?
Well, I think, just to jump in, I think the Arabs actually invented the numeric system. So none of our computers would exist without zeros and ones. And 0 and 1s, I think, was invented in the, what was it? I don't remember the exact century, but it was
Mesopotamia, right?
Yes, it was invented in that region, what is it, over 2,000 years ago. So I think, we're going through full cycles, and you're going to have people who oppose innovation. You're going to have people who are going to push against it, who are going to tell you this is not something good for the country or for humanity and so on. But I think you can't fool all the people all the time. And the gap between the rich and the poor has never been greater. Even during the Roman Empire, you did not have the type of gap between the rich and the poor. And really, the blockchain is here also to help redistribute opportunity, because instead of opportunity concentrating in Silicon Valley or concentrating in London or concentrating in this or that city in the Middle East, on the blockchain, opportunity is equally distributed the same way that intelligence is equally distributed on this planet. So I think we can push it, we can try to delay it, we can ignore it, but sooner or later, this decentralization will take hold on the entire planet.
Thank you. Bill, what's your take on that?
I would say, think about what happens in banking in India and kind of the big divide, right? I mean, there's about $50 billion that goes to India in remittances, and something like half of that comes from the Middle East, if not more. It's probably more now. It's probably, my stats are probably 2 or 3 years out of date. And, probably at the end of the day, between transportation costs, remittance costs, foreign exchange fees, my educated guess, because I used to work in the remittance space, would be anywhere between 12 and 14% of that money is just gone, right? It just evaporates from the sender and recipient's perspective, and that's at least a couple of $1 billion, right? So you could put that money back in the hands of consumers almost immediately if they could effectively do peer-to-peer transactions to get monies home and have liquidity on both sides of the border, meaning they can easily get money in and out, which is one of the problems we're trying to solve at Abra, where we actually have cash tellers now operating in the Middle East and India, where you can actually deposit cash into the Abra wallets, have Bitcoin or stablecoin on your phone, remit that in real time to another Abra user's app, and then they can have real-time liquidity at home in India, for example. And so I think this is a killer app for digital assets in the Middle East. I think that, look, we have the same hunt for yields going on in the Middle East that we do in the United States and in Europe, and people want to make money on their money, right? And right now, you can easily earn 8% in dollar terms if you choose to hold dollar as opposed to Bitcoin or Ethereum. And at the same time, they want to invest in the same digital assets that we're investing in here. And so a big chunk of our user base is now high net worth customers in the Middle East, just as we have, migrants using Abra in the Middle East as well. And I think it's fantastic that crypto is enabling us to democratize access to these services for all aspects of the income pyramid.
Thank you. Mance, what's your take on blockchain prospects in the Middle East?
Yeah, well, so, blockchain as a concept is, of course, much larger than money. It's, of course, Bitcoin has kicked it all off, and we often think about it in terms of money, but it's all about decentralizing control and trust and adding transparency. And there's nothing, I think, that's unique to the Middle East that would benefit from that, or at least I haven't identified something specific that's unique to the Middle East that would benefit from that more than maybe other regions. But I do agree with everyone here on the panel that there is a worldwide movement towards decentralization, and it's because everyone longs for that transparency and not having to depend on a central governance or organization, and having to trust them not to be nefarious or do bad things, often sometimes with their money, but with their trust generally, whether it be the ways in which they monetize the information they collect about those that use their products and services, the fear that they are being taken, consumers or retail users are being taken advantage of and in ways that are not easily discernible and transparent, breaking down the requirement to have quality, world-class products and services from having some central organization that has to manage those. I think it's a big idea that the world is waking up to, and it's going to take hold, and it's going to be reflected in every part of society.
Thank you, Brian.
Well, Dubai stands out from early on. I believe it was 2017 when His Highness said, "Let's make all of Dubai, based on blockchain technology. Let's have all our central, kind of functions as to whatever degree it makes sense, whether it's land titles, whether it's regulatory of financial markets, whether it's other kinds of citizen services." And I think that was very foresightful because, well, first off, they resourced an entire agency called Smart Dubai to go and kind of fan out and research how to build these different pieces, pull them together, put up quite a bit into pilot and then into production, which was really great to see. And none of it required a cryptocurrency at the heart of it to make it work. It was about decentralized amongst a population of organizations, amongst a set of government organizations, or amongst a set of private sector and public sector actors. And it's been really smart to see that evolve because in the region, Dubai and Abu Dhabi and a few other places stand out as places where you have strong institutions that are trusted by their citizens, but most of that region does not have strong institutions. And you can grow strong institutions if you have high confidence by the citizens in that those organizations are properly regulated, transparent, accountable, and reflective of the kind of society everyone wants to build. And I think that's possible through decentralized ledger technologies, and doing this in a way that is regional. If you look at how tight the European Union is now as an operating entity, yes, you have Germany and France from time to time sparring, but for that kind of regional integration, just think how different the region is, and right there locally between Saudi Arabia and Iraq and Iran, and now new governments in Afghanistan, right, and Pakistan and beyond. I mean, if you want regional cohesion, you're going to have to build digital systems that account for the decentralized nature of that, right? It's very different amongst the governments in that region, but you still need traceable supply chains. You still need governance systems and payment networks that span everybody there, and globally too, obviously. So that really is only achievable with technologies like distributed ledgers, like blockchain technology, that don't require you to park all your faith and all of your central registry inside of one country or one set of servers. And so I think Dubai has benefited from having 5 years of this leadership in thinking at the top level too, and I think it can really remake how governments, the private sector, and citizens all work together.
Thank you so much. Well, here's to digital innovation and to Dubai. And here's to my amazing panelists today: Bill Barhydt, Alex Mashinsky, Brian Behlendorf, Mance, Harmon, and Olga Yaroshevsky. Thank you so much for listening to us. It's Gulf Blockchain Week. Enjoy the rest of the conference. I'll see you soon. Bye-bye.
Well, guess what? It's me again.